What's up, crypto fanatics, and welcome back to Bitcoin Bulletin, the only place you need to be for all things crypto. We're kicking things off with a massive surge. Bitcoin has just blasted past $115,000, hitting a 3-week high. We're talking inflation relief, massive ETF inflows, and whispers of a Fed rate cut. This is huge. But hold up, because the euphoria might be fading. We're seeing a dramatic drop in Bitcoin buyers, with investor excitement cooling off. Is the crypto party officially over, or is this just a brief pause before the next rocket launch? We're diving deep into what's really going on. And the drama doesn't stop there. Bitcoin is locked in a fierce $115,000 tug-of-war. While whales are strategically accumulating, the market is holding its breath, waiting for the next big catalyst. What does this mean for your portfolio? We've got the inside scoop. Finally, an incredible story of everyday heroism. A gas station clerk, Avalon Hardy, became a real-life crypto crusader, unplugging a Bitcoin ATM to stop elderly women from falling victim to scams. This is a must-watch. Stay tuned for all the details and make sure you're subscribed and have that notification bell on. Bitcoin's bull run continues, topping $115,000 amidst ETF frenzy. Bitcoin has just achieved a significant milestone, soaring past $115,000 to reach a 3-week high. This impressive surge is being fueled by a potent combination of declining U.S. inflation figures and a consistent stream of inflows into Bitcoin exchange-traded funds, ETFs. The positive market sentiment is further bolstered by growing expectations that the Federal Reserve might implement a 25 basis point rate cut next week, a move that typically ignites investor appetite for riskier assets. The rally isn't limited to Bitcoin. Ethereum has also seen a healthy climb, trading above $4,550. Major altcoins like Solana and Dogecoin are also experiencing sharp increases, with Solana jumping over 7% to $239 and Dogecoin rising 5% to 26 cents. This broad-based strength across the crypto market indicates a widespread recovery in investor confidence. Market analysts are pointing to a dual driver: macroeconomic stability and robust institutional demand. Bitcoin ETFs alone have seen over $928 million in inflows, a clear sign of strong, sustained interest from both retail and institutional investors. This influx underscores the growing acceptance of Bitcoin as a legitimate investment vehicle. However, the path forward isn't without its challenges. Bitcoin encountered stiff resistance just above $116,000, where a significant number of sellers stepped in to limit further upward momentum. This rejection at a key psychological level highlights the ongoing caution within the market. While the rally signals a renewed bullish sentiment, the active selling pressure at higher price points suggests that traders are still wary of a potential downturn. Derivatives markets are also reflecting this cautious outlook. The recent weekly options expiry showed a put-call ratio of 1.3, indicating that bearish bets slightly outnumbered bullish positions. This data suggests that many traders are anticipating Bitcoin to remain within a defined range, likely between $111,000 and $116,000, rather than embarking on a dramatic breakout. Furthermore, CryptoQuant's Bull Score Index has signaled bearish trends across several key indicators, including the MVRVZ score and stablecoin liquidity. Analysts are warning that any sudden shift in market sentiment could trigger a wave of profit-taking and liquidations, potentially leading to a sharp price correction. If Bitcoin can successfully break and sustain a rally above the $116,000 resistance, analysts believe the next significant target could be $118,000, with crucial support identified around $113,700. However, the market remains sensitive to the Federal Reserve's upcoming interest rate decision, which could introduce significant volatility. Adding a unique perspective, Sean Ono Lennon, son of the legendary John Lennon, recently spoke out in praise of Bitcoin as a hedge against runaway money printing, reinforcing its appeal as a scarce, decentralized asset in uncertain economic times. For now, Bitcoin's uptrend appears steady, but the looming bearish signals and the critical resistance at $116,000 mean that further gains could be challenging, possibly leading to another dip below $110,000 in the near future. Don't go anywhere, because the market's next move could be even more dramatic. Next up, we're diving into why Bitcoin buyers are suddenly vanishing and what it means for the crypto party. Crypto euphoria fades as Bitcoin buyer interest plummets. It appears the crypto party might be winding down, as recent data suggests a significant drop in Bitcoin buyers, signaling a potential cooling off of investor enthusiasm. This shift comes after a period of intense excitement, leading many to question whether the current market dynamics are sustainable or if a correction is on the horizon. The cryptocurrency market, known for its rapid and often unpredictable price swings, is currently experiencing a notable shift in investor sentiment. While the allure of quick profits has drawn many into the space, the fading euphoria suggests that a more cautious approach might be taking hold. This could be attributed to a variety of factors, including broader economic uncertainties, regulatory developments, or simply a natural cycle of market exuberance. Market analysts are closely monitoring these trends, seeking to understand the underlying causes of this decline in buyer interest. Several factors could be contributing to this phenomenon. For instance, the recent price action of Bitcoin, while showing resilience, might not be providing the explosive growth that attracted speculative investors. Furthermore, the increasing maturity of the crypto market means that investors are becoming more discerning, demanding stronger fundamentals and clearer regulatory frameworks before committing capital. The implications of this waning interest are significant. A sustained decrease in buyer activity could lead to downward pressure on prices, potentially triggering a broader market downturn. This would not only impact Bitcoin, but also the numerous altcoins that often follow its lead. Investors who entered the market during the recent hype cycle may find themselves facing losses if the trend reverses. However, it's also possible that this is a temporary recalibration. The crypto market has a history of sharp rallies followed by periods of consolidation. This current phase could represent a healthy correction, allowing the market to digest recent gains and establish a more stable foundation for future growth. The key will be to observe whether this decline in buyer interest translates into sustained selling pressure, or if new catalysts emerge to reignite enthusiasm. The broader economic landscape also plays a crucial role. With inflation data and potential interest rate decisions from central banks on the horizon, investors are adopting a more risk-averse stance. This cautious approach naturally extends to speculative assets like cryptocurrencies, leading to a reduction in overall market participation. This cooling-off period could be just the calm before the storm. Next, we're breaking down the intense $115,000 Bitcoin battle, where whales are making their moves. Bitcoin's $115,000 showdown. Whales accumulate as market eyes next big move. Bitcoin is currently locked in a critical price consolidation phase around the $115,000 mark, a pivotal moment that has the entire market on the edge of its seat. This period of relative stability, following a monumental rally that saw Bitcoin shatter previous records, signals a strategic pause as the market absorbs recent gains and braces for its next significant catalyst. This consolidation is far from a simple pause. It's a fierce battleground where institutional demand clashes with profit-taking. The outcome of this intense tug-of-war between buyers and sellers will undoubtedly shape Bitcoin's trajectory for the foreseeable future, sending ripples across the entire cryptocurrency ecosystem and impacting companies with significant digital asset exposure. As of mid-September, Bitcoin has found a temporary equilibrium, fluctuating mostly between $110,000 and $116,000. This follows a volatile August that saw a notable 6.5% decline, breaking a 4-month winning streak, largely due to substantial outflows from US-listed spot Bitcoin ETFs. However, early September brought a resurgence, with increased trading volumes, particularly in Europe, pushing Bitcoin back above the crucial $110,000 level. A subsequent surge past the $112,000 resistance propelled it above $115,000, driven by sustained bullish momentum and positive speculation surrounding potential U.S. Federal Reserve interest rate cuts. A fascinating dynamic is unfolding among Bitcoin's largest holders, the whales. While larger whales, holding 1,000 to 10,000 BTC, engaged in significant profit-taking in August, offloading an estimated $12.7 billion worth of Bitcoin, a contrasting trend has emerged in September. Mid-sized whales, 101,000 BTC, have been steadily accumulating, adding over 65,000 BTC in the first week of the month. This shift from distribution to accumulation by different segments of large holders suggests a renewed institutional confidence and is creating a crucial counterbalance to selling pressure. The holder retention rate, reaching a 2025 peak of 80.49%, further emphasizes the strong, hodling sentiment among long-term investors. Market reactions have been mixed but largely positive. While institutional demand remains robust, evidenced by nearly $2 billion in inflows into U.S.-listed spot Bitcoin ETFs in September, retail sentiment on some platforms has shown a bearish trend around the $114,000 mark. The leverage ratio has also hit a yearly high, indicating strong conviction among traders expecting further upside. Macroeconomic factors, including softer inflation data and a weakening jobs market, are fueling expectations of a Federal Reserve rate cut, which historically benefits risk assets like Bitcoin. This consolidation is a critical test of market strength, potentially forming a solid foundation for a rally towards new all-time highs above $124,500. Conversely, a failure to hold key support levels could signal a deeper correction. The impact on public companies is substantial. Cryptocurrency exchanges like Coinbase could see increased trading volumes and revenue if Bitcoin breaks out, while miners like Marathon Digital Holdings and Riot Platforms will experience a significant boost in profitability. Companies holding Bitcoin on their balance sheets, such as MicroStrategy, will see the value of their holdings fluctuate dramatically with Bitcoin's price action. But what happens when the digital gold rush turns into a real-life rescue mission? Get ready for an incredible story of a gas station hero saving the day next. Gas station hero unplugs Bitcoin ATM, foils elderly scam ring. A heroic gas station clerk in Boise, Idaho, has become a beacon of integrity, repeatedly intervening to stop elderly women from falling victim to cryptocurrency scams at the store's Bitcoin ATM. Avalon Hardy's quick thinking and bravery have potentially saved victims thousands of dollars and highlighted the dark underbelly of crypto fraud. The core appeal of cryptocurrency, its decentralized and largely unregulated nature, also makes it a fertile ground for illicit activities. This story serves as a stark reminder of the vulnerabilities exploited by scammers, particularly targeting older adults who may be less familiar with digital currencies. Hardy first noticed a pattern of suspicious behavior. Elderly women entering the gas station with large sums of cash, appearing anxious, and often on their phones while using the Bitcoin ATM, BTM. On 3 separate occasions, she intervened directly, gently questioning the women about where their money was going. When her initial approach didn't deter them, particularly a 79-year-old determined to send $15,000, Hardy resorted to drastic measures. She unplugged the BTM from the wall, physically preventing the transaction. The following week, she repeated this heroic act, saving a 75-year-old woman from losing $19,000. Hardy estimates that the Bitcoin machine is rarely used for legitimate purposes, suggesting that a vast majority of its transactions in her store are linked to scams. She believes she has successfully thwarted at least 7 crypto scams originating from her location. This situation is not isolated. Crypto scams have surged, with revenue reaching at least $9.9 billion in 2024, a 40% increase from the previous year, according to Chainalysis. An FBI report from 2023 identified older adults as the most vulnerable demographic, with those aged 60 and above reporting over $1.6 billion in losses. The tactics employed by scammers are increasingly sophisticated, ranging from impersonating government agencies and banks to using AI-generated deepfakes and voice impersonations to create fake hostage situations or manipulate victims into sham investments, a tactic known as pig butchering. Matthew Hogan, a crypto crime specialist with the Connecticut State Police, noted that AI is being used to create convincing fake arrest warrants and manipulate signatures, making these scams more nefarious. The lack of understanding among older individuals regarding how crypto works and the difficulty in tracing transactions further exacerbates the problem. Once crypto is sent, it's typically gone forever, unlike traditional bank transfers. Brad Thorne, a financial crimes detective with the Boise Police Department, praised Hardy's actions, stating that individual interventions are currently the most effective way to disrupt these scams before they occur. Hardy's bravery underscores the critical need for greater awareness and protection measures against crypto fraud, especially for our most vulnerable populations. What a story of courage, but the market's biggest moves are still ahead. Stay tuned as we wrap up today's Bitcoin Bulletin with a lightning-fast recap and your chance to win. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin surge past $115,000 on ETF inflows and inflation relief, but bearish signals are still lurking. Investor euphoria is fading, leading to fewer Bitcoin buyers, while whales engage in a tense tug-of-war around the $115,000 mark. And a huge shout-out to Avalon Hardy, the gas station clerk who heroically unplugged a Bitcoin ATM to stop scams. If you haven't already, smash that like button, subscribe to Bitcoin Bulletin for more market insights, hit the notification bell so you don't miss a single update, and follow us on all social media platforms for real-time news. We'll see you next time.